Hello, chart watchers, and welcome to this Monday, April 15th, 2019 Market Watchers Live Show with your hosts, Tom Boley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Let's take a look at what's going on in the market today. We got the Dow Jones Industrial Average currently down 71 points, the S&P 500 down 8, the NASDAQ down 29, and the Russell 2000 down 4. So across the board, we're seeing a little weakness this morning. 10-year Treasury yield down about 1 basis point. It was up slightly earlier, but it is at 2.55%. We'll talk about that in just a minute. That is a key area of yield resistance. The volatility index, after closing down at 12 or very close to 12 on Friday, we are up about 7.5% today with a little bit of weakness, but I think it's pretty clear that the overall trend has been lower in the volatility index, and that is good news for the bulls. Leading to the upside, we have some we have consumer staples and utilities, two defensive groups. You can see staples actually making a breakout to a new high here in 2019. Very good news for those who are trading in the staples area. Utilities also maybe putting in the right side of a cup off of an uptrend, very bullish pattern. To the downside, the two groups lagging, we have real estate, which has been one of the best groups in 2019, actually pulling back today close to 1%. And then we've got financials, had a big day on Friday with the banks. Some of the bank earning reports that came out, like JP Morgan. Well, we've had some more earnings reports out today, and the financials are down a little bit. Banks, as you can see, giving back some of the gains that we had on Friday. And in the investment services area, we've got Goldman Sachs reacting pretty negatively to an earnings beat. They did beat on their bottom line, but the stock is down more than 3% today, and that's adding to some of the weakness in the financial area. All right, Erin, I've got 3 words for this Monday. Can you guess them?
Tiger Woods Masters.
Close. Well, I've got a couple of different 3. One is it's tax day. That's bad news for everybody.
Oh, I'm trying to forget that one.
Yeah, let's kind of move right past that one. I'm going to say my 3 words for this Monday: greatest Masters ever.
Yeah, I could live with that statement. I think so. I didn't get to, as I was admitting earlier before the show, I didn't get a chance to actually watch on Sunday, but I did watch the Tampa Bay Lightning get beat for the 3rd time in a crazy playoff series. They're like the hugest, biggest number 1 going in from the NHL. They had the best record forever. So that was pretty fun, but I know not nearly as exciting for probably 85% of the audience.
I like that transition, the way you went straight from golf into hockey.
Oh,
I'm
going
to reverse it. I'm going back into golf again because I think that celebration is going to live on for many, many, many years. I mean, Tiger, of course, he set a lot of records, but one of the records he set yesterday was the longest period between Masters wins. Gary Player previously, I think it had been 13 years, and Tiger went 14. So sometimes I almost think, well, maybe he did this intentionally so he could get another record. I'm kidding. He didn't, of course, do that. But it was pretty impressive. I mean, it reminds me of the Cal Ripken celebration, when he went around,
Oh, yes.
when he passed the record for most games in a row in baseball, and the 1980 Olympic hockey between the U.S. and Russia. I mean, to me, that celebration yesterday was on a par with some of the greatest sports events ever. So, and regardless of whether you like Tiger or not, I know that there are people on both sides of the equation. It is a tremendous story, tremendous comeback story from what he's gone through to become a Masters winner again for the 5th time.
Absolutely. He paid his dues.
He did. And it's good for the sport. Even if you don't like him, I think it's great for the sport. I mean, the crowds were just incredible. I can only imagine the revenue generated from having so many viewers watching that yesterday, but it was incredible. But we do have the market to get into.
That's right.
So I'll let you take it away.
All right, let's see here. So tomorrow I have a workshop. I'm still toying with what I'm going to do. I just don't know, guys. I'm thinking of going over some scans, but let me know what you might be interested in the survey. Tom McClellan is going to be here Wednesday. Julius DeKempener will be here on Thursday. And oh my goodness, we have a holiday on Friday. There will be no show because the stock market's closed for Good Friday. Today's agenda, well, it is Monday, so Monday setups will start off after the news and headlines. Earnings spotlight today. 10 and 10, our very first symbol will be Ford Motor Company. And then finally, we'll finish up. I'll give you the sentiment update. So stick around for that. That's going to be very interesting. All right, Tom, technical news and headlines. Let's start the week off.
All right, sounds good. Well, we only had one economic report out this morning, and that was the April Empire State Manufacturing Survey, which came in ahead of expectations, 10.1 versus 6.8. And when we take a look at the 10-year Treasury yield chart, you can see that the 255 level that was the support back here in January has now been tested. We've come back up. We've put in a higher high and a higher low in the short term, just looking back really over maybe the last three and a half weeks. So we got a lot more work to do here, but the improving move to the upside in the 10-year Treasury yield is certainly helping areas like banks. I mean, if we pull up the Dow Jones U.S. Bank Index and compare it to the S&P 500, you will see that while we have been bouncing in that yield, take a look at what the financials have been doing during the same period. So I think it's pretty clear that when we get the rising Treasury yields, that is something that is going to drive money into the banks and into financials in general. And so something to keep in mind, because if we do continue this uptrend, if we can get through today's earlier high and start making our way back up toward 270 or 280, that is going to bode well for the relative performance of banks and financials, something to keep in mind. We have a couple of earnings reports out this morning. And of course, we started things on Friday with JP Morgan and a number of banks, and we're continuing that theme today. As you can see, Citigroup beat. Also, M&T Bank beat. And then also in the investment area, Goldman Sachs beat on their bottom line. Charles Schwab beat. But it's not really translating today into continuing push to the upside. But first, I will pull up the Citigroup chart. Let's take a look and see what's going on with Citigroup. Citigroup did break out on Friday with JP Morgan. Today is pulling back a little bit, down less than 1%. But this is not bad. We did make a breakout. Going back and retesting a breakout level is something we see tactically quite often. And Citigroup did beat on their top line. So $18.58 billion in revenues versus $18.56 billion expected. On the bottom line, they beat $1.87 versus $1.78. So this is a bank that's doing pretty well. And on a relative basis, since the beginning of the year, Citigroup's been a very strong performer relative to its banking peers. So this is one of the better ones out there. They did beat top and bottom line. They've got a breakout going. 20-day is above the 50-day. I think this is a stock, if you're into the banks, this is a stock certainly to keep on your radar. Goldman Sachs. Let's go ahead and move into Goldman Sachs because this was the worst performing Dow stock. You can see it is coming back down, perhaps just to test its 20-day moving average, something to keep in mind. But as the overall group has moved up in the investment services space, you can see on a relative basis, Goldman Sachs has kind of been going along for the ride. I don't know that I would necessarily say that they've had tremendous leadership. Maybe off the bottom for 3 or 4 weeks they did, but since then it's really just been sideways with the overall group. And that's not really helping them outperform the S&P 500. So I'm a little bit more cautious on Goldman Sachs, but I think the market goes higher, and usually a rising tide lifts all boats. So I'm expecting Goldman Sachs to go up, but I wouldn't be a fan of owning it until they began to show more relative strength. Let's take a look at Charles Schwab. So Schwab came out closer to the market open with their earnings today. They did gap up. They beat on the top line, beat on the bottom line. So got a nice positive reaction, but so far reversing and down 1%. And when you look at this stock relative to the investment services, look what's happening. Schwab has been an underperformer. So yeah, you get good news, you get a gap up, and then the sellers come right back in. We want to be careful on Schwab. I would say until we clear 48. You could argue off of this downtrend, we have a left shoulder, neckline, head, right side of the neckline, and we're in this right shoulder. Couldn't quite make the breakout with earnings, but a breakout and close above about 48.5, I think would be very bullish for Schwab, at least on an absolute basis. Again, we want to see that relative strength come in. MTB, this is M&T Bank. They also went up on Friday along with most banks, but came back down and actually lost gap support. Need to hold, I'm going to say 160. That's been a recent low here over the past couple of weeks. M&T did beat on their bottom line. I did not see their top line, but their bottom line, they beat by 9 cents. And so we'll see whether or not we can hold on to this area of short-term support, which is right at about that 160, 161 area. Something to keep in mind here. All right, let's see. I'm going to go over one company that will be reporting earnings after the bell today, and this is in the trucking area, J.B. Hunt Transport Services. Now, neither the group nor the stock look very good. Look at J.B. Hunt relative to its peers. It has been downtrending almost a year now. We've had a couple of pops to the upside, but for the most part, this has been a relative downtrend. So it's not one of my favorite stocks in trucking. And then when you look at truckers, they actually just a few weeks ago in late March put in their year relative low versus the S&P 500. So I'm not expecting a lot here this evening from J.B. Hunt. We'll see whether or not they can give us a surprise to the upside. And occasionally you get these stocks that are in downtrends and you get a character change on their chart. They'll come out with really strong earnings, the market not really looking for it, and that can be a catalyst to a new uptrend. So I'm not going to completely write the stock off, but based on what I'm seeing here, I'm not going to feel very good going into the earnings this afternoon. I wanted to mention at the top of the show, talked about consumer staples, and you can see consumer staples making a pretty big breakout here over the 56.25 level. And you might say, well, this isn't good. You've got defensive stocks breaking out. That's bad news for the market, right? That is not bad news for the market. We actually want to see wide participation. We want to see every area of the market technically sound. So this is not a bad thing. What you want to focus on is whether or not it is breaking out on a relative basis. So you want to look at the XLP relative to the S&P 500. And when we pull that up, you can see that since the December low, consumer staples have been downtrending relative to the S&P 500. This is what you want to see during an uptrend. Because when we go back and look at the absolute chart, it's telling us that consumer staples are going up. So money is rotating, or well, money is going into consumer staple stocks, but it's not rotating in as much as it is into the more aggressive areas of the market, like the technology, like consumer discretionary, and so forth. So this is a perfect setup for the stock market. We want rising prices, a lot of areas breaking out, lots of technically sound areas where buyers will be interested, but we want to see the relative weakness in the defensive groups for the most part, and that's what we have. Okay, I'm going to go ahead and turn it over here. I think this is a good point to turn it over to you, Erin. So I know you got a number of upgrades, downgrades. What you got today?
Sure thing. Yeah, I do have quite a few. The list was very long, so you'll see that in the summary slide. But I picked out 6 that I thought would be interesting to look at. So let us start with CC. Chemours was upgraded by SunTrust today from a hold to a buy. They raised their target from $40, which of course they've already made, all the way up to $52. So they're looking for the high for the year to be challenged at this point. I like the breakout here. And of course, you know, my PMO is set up just beautifully here on the breakout. So I have to say I like this upgrade. The only thing that's got me a little concerned is, you know, we broke out earlier this morning and now we're back to the bottom of the trading range. So that's a little bit of a concern. But I think overall, Chemours looks pretty good. Olin Corp was upgraded today by Nomura. It was upgraded from a reduced to a neutral, and they raised their price target from $22 to $25, which, well, we're already there. But anyway, that's what was listed. So we could see we've got the PMO buy signal. Notice that OBV volume is going the right direction. I like to see that. And of course, the scooter is starting to improve. If we take this into an annotation mode and look at some support and resistance, obviously, there you go for shorter term overhead resistance. And that actually, notice that matches up pretty well with the bottoms that we saw last summer. So I would be looking for a move to the 2750 area. I think the PMO looks great with that OBV rising. This is actually a pretty nice candidate, especially getting over that 200-day EMA And then we also had that 20-50-day EMA positive crossover, and that gives you a decision point intermediate term trend model buy signal. All right, next one up, Pinnacle West Cap Corp. Under utilities, conventional electricity, B of A Merrill upgraded this from a neutral to a buy, and they raised their price target to $105. So they are certainly looking for the high for the year to be broken back from March. PMO is starting to turn around. So, and you've got this rounded bottom going on here, that cup shape. I think this one looks pretty good on the upgrade. All right. Baidu today was downgraded. They've been on the downgrade list a few times, I think, over the last month. China Renaissance downgraded Baidu from a buy to a hold. And as you can see, we've got the declining trend. We had gotten that intermediate term trend model buy signal up here, sadly, near the top. And the PMO was doing exactly what you want to see. But when the top was found and we ended up with that drop and breakdown below this area of what had been overhead resistance and what turned into support, broken support. And you've got the PMO has turned down. It started to turn down right after that first big drop. And now we're waiting for that PMO sell signal. So I have to say, for Baidu, I agree with this downgrade. Now, you might want to leave it on a watch list, but look at what happened. We had all of these stocks hit their December lows and just take off. And Baidu just hasn't. So, I mean, if you want to play a trading range when it gets to the bottom, feel free. But I liked a little bit more upside potential than that. All right, Carnival Corp. They've been having some bad news over the past month or two between having the outbreaks on their ships, and I guess they've had some other things that they actually went on. Gosh, what was it? What did they call it? Not suspension, but they had to go on restriction with the group, the national, or not the national, the cruise line industry. They were the group that regulates them, put them on suspension or a parole. Not oh gosh, I can't think of the word. Tom, if you think of it, feel free. But anyway, they've had it kind of bad.
Was it probation or something?
That's it. That's it. So anyway, they were put on probation, and they since had some other problems. So the spotlight is now on them. However, I have to say, I mean, when you look at the chart, you've got a PMO buy signal in here. You've got what could be a ascending triangle, which is a bullish pattern. But, I would be watching it closely. I wouldn't be interested, honestly, until you got the breakout. And I would want almost a decisive or 3% breakout here to get above this low that we had back here in March. It does have some traveling to do. All righty. Infosys. Now, Infosys was actually downgraded today by 5 different agencies. So let's go through all of those. So Investec moved it from buy to hold. Credit Suisse moved it from neutral to underperform. Morgan Stanley moved it from overweight to equal weight. Citigroup moved it from a buy to a neutral, and Nomura neutral to reduce. And if you were keeping score, that's 3 neutrals and 2 sells coming out here. Big gap down actually, we saw the gap down on Friday, and it's actually up just slightly right now. But you can see PMO is on the sell signal. Look at what's going on with the OBV. You can see all of that terrible negative volume that came in. Scooter has been moving quickly lower. At this point, you've got some support here, shorter term support, February, March level might be interesting to look at. But boy, when 5 agencies downgrade a particular stock, I don't think I would even add it to my watch list at this point. All right, and that does complete the upgrades and downgrades. Here is the listing. Like I said, there were a ton of them. So I'm not going to go, I won't be reading off all of them, but very interesting day, I have to say. But now it is time for Monday setups. All right. I'm going to get my screen ready here. There is what happened last week. We are keeping track for you of what the polls are doing here. So Tom and I picked two stocks to go into the poll, and the audience, well, I should say staff, picks two, and then we see who picked what, and I look at it so we can come back here. So of the three, I was the winner, I will admit. I had a pretty good week on Sunrun. It was up about a little over 2.5%, 2.75% for the week, so I'm pretty happy about that. But Tom, you didn't do too bad.
No, actually, Domo had a really good week. It actually went up and hit 40 middle of last week and then came back down. So it certainly was a nice opportunity for a trade, which is what I did. That was one that I actually had last week, so I was pretty happy with it. But yeah, it's pulled back and it's right near a key support level. So I think I'm actually considering trading it again.
All right. Well, let's go ahead. I'm going to pull up my Monday setups for this week. There we go. All right. So yeah, Sunrun, just so y'all know, still my target's still $17. Stop at $14.50 in the short term. In the intermediate term, $13.50. So if you're keeping score, if you're in it, those were what I had set up. So we didn't hit the stop. Obviously, we didn't hit the target quite yet. But of my picks, I did go back and look, and Berry Plastics was definitely the one I should have picked. We had a really nice run on BERY. But this week, Air Transport Services Group is my first one. This one, and I'm going to bring it into Annotate so that you can see what's going on here. We'll pick that. I liked this one because I saw a flag formation here with a pennant on it. So I saw the breakout where we came in. Intraday, we've beaten out. You can see in the thumbnail the previous top here in the short term. I look for overhead resistance. I mean, you could see it maybe at 24.50 here, but it's on the buy signal. I think it looks pretty good right now as far as a pick. And I used a couple of different scans today, so I'm really not, I'm not going to go over what I used because it would take up my whole time here. I'm going to save that one for last because that's my pick. All right, really nice setup here on Cincinnati Financial. And you've got the breakout from this area of overhead resistance that was prior overhead resistance. Today it's trading on top of that support. Got the PMO buy signal that just came in. Volume has been moving upward with the OBV has had rising bottoms with the price rising bottoms. You have the scooter in the hot zone. I think Cincinnati Financial looks really good. DocuSign, and this one's in the poll. I like this one for a few reasons. In the short term, you could maybe make a case for a little bitty flag here where we had one previously that executed and pretty much came up to the level you would expect. But now I have the PMO turning up, which I like. The overhead resistance is at $60, and currently we're trading at $55.59. So I think that there's some really nice upside potential here for DocuSign. So that's why I put that in the poll. That was my second choice. Norwegian Cruise Line. Now, I was talking about Carnival having some problems. Norwegian, you certainly a different looking chart here. And I don't know if they'll benefit from Carnival having problems. I just don't know. I'm not that interested in that. I'm more interested in the chart. And we do have the breakout. Look at this breakout above the high here from back in September on Friday. And now it's pulling back. That's exactly what you want to see, right? You want the breakout and then to see the pullback, and then that's when you get in. I think that Norwegian looks really good. I was just a little hesitant because of what's going on with Carnival. I didn't want to chance it that they might get, baby with the bathwater, as you always say, Tom. All right, you're up.
Okay. Well, first up is I'll go ahead and pull up.
Oh, wait, I forgot to tell them my pick.
Oh.
I went through all of them but my pick. My pick is Cognex or Cognix, whatever you want to, Cognex probably. CGNX was my choice. I had it at 54.51, but I'll take what was last, which is 54.32. I see a reverse head and shoulders here, possibly, although it's, not coming into, I usually like to see them come down into it, but you could also make a case for a flag here. And we're getting the breakout. PMO is looking good, trying to make that buy signal come in. Scooters back in the hot zone, rising bottoms on the OBV. And of course, in the thumbnail, here's that positive volume. So I like it. So this was my pick at 54.32. I'm writing it down right now. And you're next.
Okay, I am going to first go over Domo, which was last week's pick. It did come down to this gap support area, bounced off of it, went up to 40, and it's come back down and literally right back down here again. But if you look at the relative charts, obviously part of the software group, so it's going to be lifted by money that's been rotating into software. But it's actually been outperforming software. We had that huge pop with its earnings right here and the move up on big volume. And so we got a nice relative pop. I think that this pullback on a relative basis and on an absolute basis is a nice opportunity to get into the stock cheaper, obviously, than what it was 3-4 weeks ago when the stock was all the way up 47 and a half, now back down 37.40. But I expect that the longer term relative uptrend in software continues, and I think the stock presents pretty nice value at the current level. Now for this week, what I went with, it was Ciena. That is my pick for the week. As Erin mentioned, it was upgraded earlier today. The stock gapped up, has pulled back. I actually am going to I entered this morning at a higher price, but I do have, I am going to enter a second time if it fills its gap, which is what I'm looking for. That would be a move back down to 37.99, which is where it closed. But it came down and closed over its 20-day moving average for the first time in the last 7 weeks or so. Here was the move up after its earnings, and it pulled back substantially after that. I'm going to annotate this too, because I think there are a couple of things to look at here that I think are important. Number one, it's had great support right at about $37 or just below $37. And notice after it moved to new highs, when it pulled back, it held the prior lows. So that's what I'm watching. I can keep my stop fairly tight. And if you look back, we did this once before. I mean, when the stock went up, it pulls back. Notice when it goes up again here, it sets a new high and pulls all the way back down, holds that low, and then takes back off again. But the thing I really like about Ciena is that it's part of the telecom equipment group, which has been, if not the best area in the market, it's certainly been one of the best areas in the market. Ciena had outperformed the S&P. Ciena had outperformed even as well as the telecom group had been performing. On a relative basis, Ciena was one of the leaders. It did clearly pull back, but it has held its relative low, starting to turn up again. I think if it has a good day today and finishes back up, I hope it finishes back up toward the high by the end of the day. We'll see. But I do like the stock. I think it's going higher. So Ciena is my pick. And even though it is a little higher, I'm still going to stick with it at the current price, which is $38.37. I believe this one's got some upside potential. And if it begins to outperform the overall telecom equipment group, and I think could maybe even start to put in the right side of a cup, which would be an impressive gain from the current level. So I'll take my chances with Ciena. As far as some other stocks that I wanted to go over, I'll tell you the easiest way for me to do this, rather than go through one at a time, is in my blog article from this morning. Actually, not in the, well, yeah, actually it was in the article. I think under the setups, there's where I talked about Ciena. And then there are 9 other trade setups. Anytime you go into my Monday article, if I am providing setups, sometimes I don't like the way the market looks and I don't put these in. But if I like the market, then I'll put these setups in here. You can see GoDaddy was another one I liked. I really liked that breakout, the increase in volume we saw at the end of last week. I think any kind of a pullback below 78 is an opportunity there. TEUM, this is one I actually did buy today. I like this thing coming back down finally and testing gap support. It actually went below intraday and has come back up and trying to hold that level now. This is one that's very aggressive. I wouldn't do it if I was risk averse. I am the opposite of risk averse. But I do like this one in the short term. I think we could see a nice reversal. The stock was up to almost $6 a month ago, and now today it got as low as $3.75. So very, very big mover in both directions. But I'm hoping that this is a hammer where we get reversal off of. Watch 360, 365, though. I wouldn't be too comfortable if the stock breaks below the lows that it held back at the end of February, early March. DRI, Darden Restaurants. I like this group, and I like this 20-day test. After moving straight up, PPO looked good. I think this is a pullback. You can see we had an equal high. Longer term, I guess you could look at this more as an inverse head and shoulder, left shoulder, neckline, head, right side of the neckline, right shoulder, and a breakout with volume. So perhaps it goes back down and tests this 113 level. But I think 116 down to 113 is a nice accumulation area. Etsy, this is the other one that I picked for our poll today. Etsy, you can see down closer to this gap support area. This has been a great performing stock for a long time, and it has been one of the relative leaders in its group. Huge volume back at the end of February when it came out with its latest earnings. I think just sideways consolidating. I think the recent weakness creates an opportunity here. APPN, this is Appian Corp. Another one I think looks pretty good. Broke out, actually gapped down a little bit with its earnings, but look at the heavy volume and look at that response. So a lot of buyers showed up down here between $31 and $32. Just recently, we got down to that level. Now starting to turn back up again. I think the reward to risk here looks pretty solid. Anaplan, which is Plan, P-L-A-N. This one has gone all the way back down, tested gap support. So 33.5, 34, I think looks like pretty good area of support. We've pulled back recently, trying to turn back up here. I would expect, hopefully, that it will turn back up from the current level. FSCT, this was actually one of the setups I went over last week. I'm actually watching to see if we get a reversal today. I'm not in this one, but if we go back and close above, say, about 40.5 today and put in a hammer or a doji with a false breakdown of this support level, that might get me into the stock later today. So it's one I'm going to keep a close eye on. HUYA, this is a Chinese stock. Stock's been under a lot of pressure here in April after a huge move. This was a $15 stock 3 months ago, went up to 30, so a double in just a couple of months, has pulled back, and this is an area of recent support. You can see that the gap up in February occurred from about 21.25, and the recent low came down to about 22.25, and now that's an area that's coming into play on this weakness. So I think HUYA looks pretty good. And then the last one is also one from last week, and this is one I do own. Currently pretty flat with it, but $30 has been a really good area of support. The stock went up on some really nice volume. Lately on the selling's been coming back down on lighter volume. So far holding the support level, but I've got a pretty tight stop here. But WMGI is another one that I like. So again, if you're looking at my blog, you can just click on that one link, and it will take you straight to those trade setups for this week. And there are our setups for the week. Erin is going with CGNX at 54.32. I will go with Sienna at 38.37. And we shall see in 1 week how we do.
Yep.
All right. And of course, the audience gets to choose too. So if you haven't looked at the poll yet, you can take a look at the 6 stocks provided, 2 by Erin, 2 by me, and 2 by the staff. And we'll see what the audience thinks of our 6 picks by the end of the show today. Okay, let's go ahead and jump into the earnings spotlight segment. I'm going to take a little different approach. I always try to take a little different approach to this segment. And so the first thing I wanted to point out before I get into this is to show you, we changed the way we're doing chart watchers, if you haven't heard. There's a group of us commentators that are writing 1 week, and then there's another group writing a second week, and we're constantly, going back and forth each week. So in the past, we were doing first and third Saturdays or first and third weekends of the month, and now we're doing every weekend. So you are getting a Chart Watchers newsletter every weekend. But this past weekend, I was writing my article, and I'm going to go ahead and start with that. Because there were some areas, different industry groups, as I head into earnings season, I like to try to see, okay, what's the market betting on? You've got analysts that are going out and meeting with management teams, and then they go back to their offices and they're buying and selling stocks for themselves and for their clients. What are they doing? I mean, where's the money been going over the past month and over the past few months? Well, in this article, I highlighted the last month's relative outperformance by 7 different industry groups. So you can see home improvements over the last month, just straight up. Gambling, very strong over the last month. Distillers and vintners, strong. Renewable energy, very strong. Specialty finance, very strong. Transportation services, and semiconductors. But I further broke it down. You'll see these blue directional lines and the red directional lines. The blue ones I tend to feel a little bit stronger about. You can see here, transportation services. Yeah, we've been strong for a month, but is it just a bounce because we've been so weak? Or is this really something that's going to continue for a while? I have my doubts looking at the tremendous relative underperformance of this group going back over the last year, actually 15, 16 months. I question whether or not this is going to last. I'm not feeling great about the fact that it has 1 month. We saw this, by the way, back here, and look at what happened. We turned around, went right back down again. So again, I'm just going to be a little cautious. I'm paying attention because we do have relative outperformance, but it's not a group that I feel great about yet. Semiconductors I do like, though. Coming off of the December low, this group has been leading not just in the last month, but really since back in November, even before the market bottomed. We were beginning to see money rotate into the semis. And with the semis continuing to put in new highs, huge month on a relative basis and an absolute basis heading into earnings season, I think this is a group that's going to have a lot of positive surprises and some really strong forecasts going forward. So semiconductors is one I want to look at. Transportation services, no. Specialty finance, yes. Huge move up during this run off the December low. We just broke to a new relative high. What's not to like about specialty finance here? Renewable energy. This was a group that was really weak for a while last year, for about 6-7 months, but it's come back pretty strong and has been able to clear this relative high. So I'm going to say yes for now to the renewable energy group. Vintners and distillers, no. This is another one where I think we might just be getting a little bit of a bounce for a short period of time, like we saw back in the fourth quarter of 2018 before we would go back down. I'd be a little cautious here. I'd have to see maybe a breakout on the gambling stocks to take out that February relative high, because again, this was a group that literally was just being thrown into the gutter for 6 months or so in 2018. We saw a little bit of a dead cat relative bounce heading into February, but it has since pulled back. And so last 30 days, yes, pretty good, but I'm still questioning the overall move. Home improvements, I kind of like this group. And the reason being, on this high and this high, we've got higher highs. Here to here, we got slightly higher lows, and now we're making another run. I think we could make a push for that earlier high. And I like the fact that since November, this has been a group that's been accumulated, not just the last month, but really over the last 4 or 5 months. So I'm going to say yes to home improvement. So of these 7 groups, there were 4 that I wanted to kind of break down a little bit further. Now, there are other groups out there that are very strong, by the way. Software, some of the different areas, some of the retailers, specialty retail, still good. Restaurants and bars, I think, still fine. Computer hardware is picked up throughout this rally in 2019. So there are a lot of other areas. What I'm looking at are some of the best performers over the last month. So I'm just breaking down these 7 groups. So if I just take the 4 that I like based on the directional, these blue directional lines, then I want to get into, okay, what makes sense within those groups? So let's go back, and within home improvements, I went into my strong earnings chart list first to see which stocks I had in each of these groups. So in the home improvements area, there was a small cap that was on my strong earnings chart list, which is BMCH. BMC Stock Holdings continues to do very well. Just recently broke out again. Look at the volume picking up. I think this stock's being accumulated. I'm not sure when they report, but this is a company that definitely would be on my radar. And I can pull this one up on a relative basis so you can see what's going on here. But here was the breakout above the March high. You can see the huge move up. That was probably earnings related. So I'm guessing we probably have another month and a half before earnings come out. But look at the stock relative to the group. It's come up during this last month again. Would be even better if we could take out that high that we saw at the beginning of March. But overall, I think volume trends have been pretty good. The move off of the December low has been good. And on a relative basis to where we were back then, we are higher. So this is one I certainly would have on my radar. The group overall, as I mentioned, relative to the S&P, taking out this double top. So this is an area that I think is worth considering. Now, outside of my strong earnings chart list, I went to the scooter reports for stocks in this group and started there and found a couple of stocks I think worth mentioning. Lowe's companies. Lowe's trying to make this breakout above 117, on the verge of doing so. You can see its relative strength to home improvement has been going back more than a year. So I do think that you've got one of the better stocks in the group. It's been trading really well heading into its earnings report. I would suspect we're going to see a good report out of Lowe's. Next up is FND, Floor and Decor Holdings. Erin mentioned that this was a downgrade earlier today. I think the downgrade is an opportunity, to be honest. This is a stock that has been trending higher relative to its peers for the past 6 or 7 months. Again, home improvements doing very strong. Stock continues to move up. We are we running into some overhead resistance. I think price resistance at 45, gap resistance 47.50. Volume's a little lighter. I might be a little concerned in the near term, but the way it's trading, I think we're probably going to get a good report out of FND. Let's move on to renewable energy. So renewable energy's had a pretty big move. Let's go with a couple of stocks on my strong earnings chart list. ENPH, Enphase, great performer for a while now. And look at the strength of this stock versus the renewable energy group. So if renewable energy continues to perform well and this relative strength in renewable energy continues moving higher, I suspect ENPH is going to do the same. I would watch the 850 area. I think if you lose 850, you've got some price support there. 50-day moving average just above 850. So if we pull back and get closer to that 850 level, that would be a great entry. It's actually testing its 20-day moving average, which has been pretty strong. So ENPH, because it is smaller and carries a little bit more risk, might want to consider, if you like the stock, a couple of entry points. And I think 950, the 20-day is one. 850, though, or 870, something like that, would be a second with a closing stop maybe below that 850 area. ENPH does look good, though, on a relative basis. Plug Power, PLUG, another small company. You can see the huge rally. Look at the volume that's been coming in. This stock has a history of making big moves up and big moves down. So I'm not going to give it any, I'm going to be very cautious to the downside, which means I might get whipsawed if I trade it. I don't own it at this point. I'm not planning to trade it, but the stock has pulled back from about 285. It's down in the 240s. Lots of support down around 230, and it may bounce right off this 20-day moving average like it has for the past couple of months. Run, of course, this was Erin's setup from last week. Sunrun, one of the better scooters in this space. Huge move up. Looks to me, and I think it also came up in the 10 and 10 last week, but I see what looks like a cup forming, which is a bullish continuation pattern. So I think it's got a chance to make a run up for 16, 16 and a half. Maybe we pull back after that. But if this group continues to run, I expect Run to continue to run as well. And then finally, the last one in this space, SunPower, SPWR. This one was a little later getting started, but it's really made a move up here over the last 3 to 4 weeks. Volume's been picking up. And on a relative basis, it broke out versus its peers. It seems to be putting in higher highs, higher lows. But the overall trend, longer term, has been down versus its group. So I want to be careful. Let's say if it pulls back and fails to hold that rising 20-day here, I'd be a little bit more cautious with it because it hasn't been one of the best. It is improving, though. So it's one that I want to keep on my radar. Next up, specialty finance. On my strong earnings chart list is MSCI. Talked about this one recently. This has been a great performing stock. It was 135 at the December low. It's now threatening 220. That is a huge move off of the bottom. So you can see the overall group breaking out. You can see MSCI breaking out relative to the group, relative to the S&P, and the group breaking out relative to the S&P. This is one of the strongest stocks in the market, in my opinion. MSCI hasn't really had a pullback, but a 20-day test would be a welcome sign for possible entry here. Next up, HTGC, also on my strong earnings chart list. This one hasn't done nearly as well. And in fact, I don't know what that high volume breakdown was, but that would bother me. I'd have to go find out what that was all about. That may change my opinion on the stock. But again, part of a very strong group. Don't like this relative weakness, though. A couple of stocks that are outside of my strong earnings chart list, but might be a part of it soon based on the way they've been trading. Moody's, huge move from under 130 to almost 190 off of that December low. And again, with the group breaking out and very strong, this is one that on a 20-day test or even an approach to that 20-day test, very, very solid entry. And then the last one here, also not on my strong earnings chart list at this point, but maybe will be with earnings. Safeguard Scientifics. It did make a nice breakout back in early March, heavy volume, pulled back, got a 50-day test, come back up here, and we're trying to get through about 11 and a quarter. Haven't done it yet. One thing to note, volume on Safeguard Scientifics can be a little challenging at times. Today, only 17,000 shares. So that alone would keep me out of the stock, but it is one that's got a double bottom end, seems to be trending higher, and I wanted to at least mention it. Finally, semiconductors, and there are a ton here that I could go over. I'll take a look at several, though. Xilinx continues to be one of the best performers. Market pulling back today, and Xilinx shareholders don't care. Stocks being accumulated, a lot of money's been rotating into semis, and this has been probably, if not the best stock in the semi space, it's certainly been probably in the top 2 or 3. Excellent performer. Here is your Xilinx versus the semiconductor group, and you can see it just continues to power forward. Since that big volume move to the upside back in January, there's been very, very little selling in the stock. Next, Cree. This is another very strong stock right on the heels of Xilinx, in my opinion. Cree has been a great performer, great volume trends. Look at the relative strength here relative to its peers. Nothing really to not like about the about Cree. A smaller one, and these are all on my strong earnings chart list I'm giving you right now. MXL, Max Linear, another big breakout. The group doing well. Max Linear broke out a couple of months ago on a relative basis. I think this is another strong performer here to consider. Microchip reported strong results back in February here with the gap up, went back down, went a little bit below gap support, now has come surging back up again. Relative strength building once again on Microchip. Analog Devices, ADI, breaking out recently, and once again, you can see that relative strength starting to build. Actually went back down. You see that relative breakout over here? Seems like we went back and tested that ADI starting to move higher again on a relative basis. LRCX, Lam Research. I think Lam Research working its way into one of the strongest categories as well. Still got to get through some overhead resistance from a year ago, but this is one that's been performing very well. Did move to about a 10-month relative high back in February, pulled back, but now seems to be regaining some of its relative strength. Teradyne, TER. This is the last one that I have that was on my strong earnings chart list, but I do have a few others here. Teradyne, you can see backing up or maybe just putting in a little bit of a flag right at overhead resistance between 44 and 45, but another one I think performing very well. Now, some stocks in the semi space, not currently on my strong earnings chart list, but I suspect you're going to see some good earnings coming out of these companies coming up because of their strong performance here. AVGO, Broadcom, big move up here, continues to trade higher. I suspect when you look at the relative strength, this is one that the market certainly likes its prospects going forward. KLA 10 Core, KLAC, another one very, very strong. Recently broke out above this triple top, went back, tested it, hit the 20-day, and immediately went back up to a new high. Pulling back today, but that 20-day test has been a pretty good support area, so KLA looks pretty good on this little bit of selling. Marvell. Marvell all of a sudden has caught fire here in April. It was lagging. You could see that it kind of was strengthening first couple months and then started lagging for about 5 weeks. And then in April has just taken off to the upside and is doing so on big volume. I think there's accumulation taking place here in Marvell. LSCC, this is Lattice Semiconductor. Look at the move there with earnings, pulled back and is now strengthening again, volume coming back in. I think this is one that's probably going to set up for a really strong earnings next quarter. And just a couple more here. ENTG, another breakout with increasing volume recently, and this is another one on a relative basis, trying to make another breakout. It's been very strong in 2019. And then my last two, IPII. I think it's IPHI. Yeah, this is IPHI. And let me pull that up on a relative chart as well. But here you can see we broke out, sideways consolidation, and then broke out again. Really nice volume on Friday to make a new high. And this one you can see trying to make its way up for a double top relative breakout, perhaps something to keep an eye on. Last one, AMBA, Ambarella, has definitely been picking up steam again after downtrending for a while. We saw the gap up at the end of November, pulled back, held that prior low, and has been working its way higher. This was an earnings report gapped up, filled the gap, and is now pushing higher again. I think Ambarella's probably got more good news ahead based on the way it's been trading as well. And those are the earnings spotlight stocks that I had for today. And these are the groups, specifically the 4 groups that I really looked at in detail. So this is going to be a very interesting earnings season, Erin, because the market is pricing in a lot better earnings than what a lot of folks have been anticipating. So it's going to be crazy to see whether or not these companies can live up to all the expectations.
Absolutely. It's always an exciting time, though, when it comes into the earnings season.
Yep, I love it because it gives me. I'm constantly, going through my strong earnings chart list, taking the ones out that reported 3 months ago and are getting ready to report again, and then adding the new ones that are beating top and bottom lines. It just constantly gives me a list of candidates that I like to trade.
Yep. Alrighty, let's go ahead, and it is time for the 10 and 10. Let us see what we have together. I closed out the requests right now, but you can go in and like the ones you want if you're in the chat room, and the most popular will be our second symbol. Here is the RRG that I put together, pretty much a healthy mix of a lot of the sectors. And if we look at the actual RRG, let me take the tails down just a bit. Certainly a lot traveling close to the benchmark right now, but a few outliers. We'll see if we can look at a few of those. All right, let's go ahead and start. Ford.
Yeah, I'm not a big fan of Ford for a couple of reasons. Number one, on an absolute chart, you can see the shooting star off of an uptrend. Shooting star, it's like an upside down hammer. So if you think about a hammer carving out a bottom on a stock, I mean, look at this pullback here. Look at this hammer that printed and how that marked the bottom, and then Ford went into this nice uptrend. Well, here on the other side, we've got the opposite. We've got a shooting star candle. Volume picked up on Friday. The stock moved up into an area where we know there have been sellers before. Look at that shooting star right there in the same general area. And look what happened afterwards. I just think Ford, number one, doesn't look good on this chart. I did annotate the 20-day moving average because if you're treating this as an uptrend and you like the PPO because momentum's building, it should hold its 20-day moving average. That'll be your first clue as to whether or not this uptrend maybe has some staying power or not. But the other thing that I really don't like about Ford is if we pull up a monthly chart, go back 15 years, this stock back in 2014 was trading near $14. It's now at $9.27, while the market has gone up 45% over the last 5 years. Ford has lost a third of its market cap. So it's just been a long-term underperformer. When it's getting up near resistance level like the current one, I see no reason to be jumping in. I'm just not a fan of most of these autos.
Okay. Let's see. The most popular in the chat room is Fortinet, FTNT.
Yeah, this is one that I actually liked recently. I think maybe when we did chart breakouts, this was one I highlighted being in an uptrend and showing the equal highs and the higher lows and the breakout that came last week with the increasing volume. And this is, I think, will highlight why in my opinion, it's so important to catch. If you're going to play a breakout, you want to try and catch it as it's making the breakout and you see the volume coming in to confirm, because this is what is typical a lot of times. You get that breakout and then you get more technical buyers coming in after that. Stock continues to move up. I think it's overbought now, so I'd be a little careful. But any pullback close to that breakout level or at the 20-day moving average as we go forward, I think would be great entry into FTNT. I like the stock.
All righty, let's see. Number 3, apparel retailers, Gap, GPS.
All right, apparel retail really has struggled. Gap got the big move up with earnings, but I always talk about when you get a gap up, what kind of candle do you get? Do you get a candle where you gap up and then you just keep going up all day long, a big hollow candle? If so, that open is usually a very solid support level. But this is the opposite. We gapped up, traded up. We were very excited during the day, and then we closed near the low. And a lot of times I don't like to trade these kinds of stocks because they tend to go back and fill the gap. And in this case, we actually went a little bit lower, put in the bottom with all these other bottoms. We're trying to strengthen again. If I'm looking at this from a trading perspective, I think this reaction high now at 26.50 is important. And to be honest, I think the recent low here around 25.5, I don't want to go back down to this prior low. If this earnings truly signifies a change in character, we should go back above this 26.50 level. And that's what I'd be looking for. If we get that breakout, I'd be more interested. If we fail and go back below 25.5, then I would probably avoid it.
All righty, let's see. Next one up. I think we've looked at it, but not for a while. Consumer staples, new age beverages, and Bev.
Okay, yeah, huge move up with the big volume, and now it's come all the way back down and possibly could turn here. We did open above that gap support level. I'm just going to put on here where I think the 2 key levels are on the stock as it pulls back. First is that opening, because this open with heavy volume, this is one of those hollow candles I just talked about. So a lot of times the top of gap support will hold. Now, I like them to be earnings related. I don't think this one was earnings related, although I'm not positive. But on the other hand, you've got gap support and price support that come in around 475. So this is a stock, if you like it, it's very volatile. I would consider getting in. If I was getting in today, I'd get into a small amount. And if it got down to about 475, I'd consider filling out my position. And if it closed below 475, I'd get out. To the upside, I think you've got your target now first established up at about 670.
All right. Let's see. Next one up is Enphase, our only energy request, ENPH.
Yeah, this one was the one I just went over for the earnings spotlight. But that's fine. But this pullback is, to the 20-day moving average would be one thing that I would certainly be watching because of these prior tests, as you can see. 20 days has been pretty important, but we do have a negative divergence. So I think that 50-day could come into play. And if it does, I think that the recent low right about in here and that 50-day kind of coincide. So that would be the second area. If I was getting into ENPH, I think I would like NBEV. I'd consider 2 entries, one at the current price and one down around 870. For me, because I don't like, most of the time I don't get in twice, I probably would hold off and see if I could get it at 870. Don't know if you're going to see it, though. Very strong performer in this area.
All right. How about Seagate Technology, STX?
All right. Seagate, and we'll pull this one up on a relative chart. Okay, so first of all, I mentioned computer hardware earlier, how it hadn't been a great performer, but here in 2019 it has. There's your relative strength in 2019 of computer hardware. So the group not only is going up on an absolute basis, but it's going up on a relative basis. Seagate seems to be rolling over here relative to its peers. So I would be careful if I lose any major support levels. And on this, let's say annotate, I think here I would probably look at that last low, 45.5. I mean, if you really wanted to be ultra conservative, you could use the 20-day moving average. But I wouldn't do that simply because we've had recently a couple of breaks below and then we come right back up. I think that 45.5 level is where I would watch. Otherwise, I think this one's okay as long as it holds that level.
All right. Let's see. Next one up for our friends in Canada, Bank of Montreal, BMO.TO.
All right, BMO. I think this one looks pretty good. Another one where I don't really need the relative chart. But let's go ahead and stretch this out. Still look at it over a year. Yeah, I mean, I think we got a nice move to the upside. When we tried to break out here, you see that reversing candle? Technically, it's not a negative divergence because you don't have a higher close. And the PPO, MACD, they're all based on closing prices. So that's not technically a negative divergence, but I think in, just looking at it, I think I would view it as a negative divergence. We had a breakout. We failed. We printed a bearish engulfing candle. PPO was much lower. That usually signals a 50-day and a center line test. We got that, and now it's turning back up. So I think our lines in the sand have been drawn. I think to the upside, it's just about that 78, 75 area. To the downside, I think it's these recent lows. I'm going to say around 74.5. So I think the stock is range bound. We'll see which way it breaks out. My guess off of this uptrend, sideways consolidation, I say we break out before we break down.
All right. Let's see. Next one up, Kronos Group, CRON.
Yeah, this is in that cannabis space. And I think when I was talking about this one before, I said, be careful if we lost $19. And we lost $19. There's the support. So we had this huge move up, very heavy volume. We pulled back. That's where the buyers came in. The stock bounced off of that, went all the way back up near the prior highs, came back down, tried to hold, did not. And as soon as we broke down below that 19 level, I think what I said before was I thought it had a shot to maybe move back down toward 14. I think that's where we're heading. I would have no interest in the stock until it at least hit 14. And now you've got a downtrending stock with weak momentum. So you want to watch that 14 level. That's going to be a big support area. It needs to bounce there. If it continues going lower from there, I'd really be careful with it.
All right. The next one is in the mortgage finance space, Radian Group, RDN.
Oops. Yep, RDN. Nice breakout here. Very strong. I'm going to pull this up on a relative chart. I have a feeling we got a pretty good one here. Mortgage finance moving up. The stock relative to mortgage finance been moving up, relative to the S&P moving up, and the group relative to the S&P moving up. Hard to not like this stock based on that right there. So now the question is just, where do you get in? If I'm in it, I'm holding it. If I'm not in it, I think the breakout occurred at about 21.25. And then, of course, any kind of a pullback back to that 20-day moving average right in there is worth noting, because you can see that anytime we've been at the 20 or close to the 20 since breaking out, that has been an area where the stock is held. Here we went a little bit below the 20, but I would have even argued at that point that your key support was the top of gap support. Here's your gap up and that huge hollow candle with heavy volume. We pull back into this area. That's normally a buy point. Held perfectly. We broke out. So I think 21.25 to 21.75 would be good entry into the stock. I like it.
Okay, and our final one, CATS, CATS, healthcare provider.
All right, yeah, I noticed the group was doing pretty well today. Healthcare providers finally getting a little bit of a break. But here's the group overall. It's been going down. This stock has been one of the better performers within the group. So if the stock or if the group does well, I would expect another breakout here. The downside for me to the stock is the lack of liquidity. So let's pull up first the key areas. We need a break above about 14.5 on a closing basis. After we gapped up, you can see we did have selling that came down to about 12. So I'm going to say 12 to 14.5 is your trading range. But today's volume, 69,000 shares of a $13 stock. That is not much dollar volume on a stock. So it's one that I would avoid simply because of the lack of liquidity. But looking at the chart, it is one of the better stocks within healthcare providers. And if that group were to return back to favor, which it has not been, as you can see, in 2019, but if we start to perform better, make some breakouts along the way, this one seems to be the one that's loved in the group. So good stock, bad group.
All right. That does complete the 10 in 10. Here are the symbols that we just went over. Well, that Tom just went over. All of those charts will be in the Market Watchers Live chart list. Just go to the Market Watchers Live blog from the articles tab, and you will see the link right there at the top. And of course, I always put them in the Market Watchers Live recaps. All right, time for our final market update. Let's get it going. All righty, here we go. Make sure we have this perfectly updated. There we are. Okay, so as you can see, most markets are down, but I do notice that the Dow and the S&P 500 are trying to make a move back up after hitting lows. Currently, Dow is down 0.2%, S&P 500 also down 0.2%. NASDAQ forming a reverse flag here, not like in this setup. But at the same time, if we get back up here, test and come down, that would be an ascending triangle. At this point, the NASDAQ is down 0.37%. Mid-caps lower. Russell 2000 falling a bit faster than the rest. It is down over 0.5%. Canadian markets are up today, though, doing quite well. TSX is up 0.25%. Treasury yields down slightly, reading 2.554%. Volatility index is starting to rise, but we're still at a mere 1263 for the VIX, which shows a lot of complacency. UUP right now, dollar is unchanged. GLD, Spider Gold is down 5 cents, so down just slightly. Made up a lot of a loss. Quite a bit of the loss from the morning. We had a big gap down, and it has been traveling higher since then. And USO, really big downside move, but trying to come back up out of that. Currently reading $13.21, and TLT traveling mostly sideways, but up 16 cents. Let's look quickly at the sector summary, and here you go. Very interesting that the defensive sectors are in the lead right now, and actually the only sectors that are in the positive category. Right now, real estate is the big loser, down 0.75%. That's all I have for the final market update. Passing it to you, Tom. I'll get ready for sentiment.
All right, here is a chart of the S&P 500. It's an hourly chart that goes back to last month, but you can see that on Friday we gapped up, and that was with the earnings, some of the bank earnings that came out. Also, Disney's announcement, if you recall, Disney Plus had come out with their new service to compete with Netflix. A lot of that drove the S&P 500 to the upside. We've pulled back, but right now on an hourly basis, I think things look pretty good after having a negative divergence to start the month. So at end of that first week, April 5th, you can see higher prices, lower hourly PPO. So I would have expected a centerline test and a 50-hour test, and we got that. We got the 50-hour test back on Tuesday of last week, and we also got close to that PPO centerline. Now with Friday's gap up, we started to turn back up. Now we're holding the rising 20-hour moving average, trying to turn back up. I think this continues to be very bullish overall behavior. So I think the market looks good, and I'm interested to see what the sentiment looks like. So let's move into that.
Excellent. Let us get started. Okay, here we go. At this point, I'm going to start the Decision Point Sentiment Update for April 15th, 2019. Let's go ahead and take a look at the various sentiment charts. I'm going to be going over the put-call ratio, the American Association of Individual Investors, National Association of Active Investment Managers. We're going to see how exposed they are to the market. We have the RIDEX ratio, a decision point sentiment indicator, Wall Street Sentiment Survey from Mark Young at wallstreetsentiment.com. We'll finish with a look at my what I call climactic indicators, VIX and breadth, and then we're going to look at gold and gold sentiment. So with that, let's go ahead and get started right now. Okay, here we go. Right now, we're going to start with the put-call ratio. And what I wanted to point out about the put-call ratio is that at this point, we're looking at very overbought readings. Now, I do invert my scales because I like to look at things as overbought at the top and oversold at the bottom. So when we see overbought readings, that is bad for the market. We start to look for that reversal when things get overbought as far as the indicators go. And at this point, they are overbought and are heading higher at this point. So it's just starting to stretch itself out even further. I know a lot of people note that the OEX put call ratio tends to travel in a different way, and that's typically because it's used, from what I understand, as a hedge, and so it does tend to have the exact opposite going on. All right, next one up is AAII investor sentiment. This is the, here we go. This is actually a survey, and you can, it's pretty much anybody can take it at aaii.org, and we take a peek at what the how many bulls there are versus bears. And what I noticed is, first of all, right here, we have a bull-bear ratio that is now almost at 2. And what does that mean? We have almost twice as many bulls as we do bears. So that tells you, of course, that investors are very, very bullish. And when that happens, when they get very bullish and not very bearish, that is typically the place you start looking for a turnover, a reversal to the downside. Sentiment is contrarian. If everybody is very bullish, then typically that's when you're going to start to see that market turn. You know, it takes a while for everybody to get on board. And when you're looking at AAII, this one's pretty good because these are usually the last people to know on the AAII survey. All right, next up, name exposure. Okay, and what I wanted to point out on the name exposure is we are continuing to see, let me get this updated, it didn't update for us. Here we go. We are continuing to see climactic and high exposure. Granted, it came back just a little bit from last week, and as you can see, when that reading came in, the market did end up making a move to the upside. A lot of times these guys are right, the National Association of Investment Managers. So these guys a lot of times will be right. You may get a little bit of lag on what's going to happen when they start to get very exposed. But they're starting to pull back just slightly. It's still very climactic upside reading. I would read this as very bearish still for the market. Might take a little bit more time to get in there, but you know, we're getting ready to challenge these all-time highs on the S&P 500. It seems the perfect place for a pause at a minimum and possibly a downturn. All right, Wall Street Sentiment Survey. This is up next. And what I am looking at right now as far as Wall Street Sentiment Survey is, look at this, another bull-bear ratio that is near 2, twice as many bulls as there are bears. And again, when you get these climactic readings on these ratios, that typically is telling you that people are, of course, very, very bullish going into the week. And the more bullish they are, the more bearish that is for the week upcoming. Market timers pretty much came in very bullish this week at, let's see, and make sure this is, yep, that's came in at 53%. That was actually the reading last week. That's why I was looking to make sure. And 27% came in as bears. I actually was in that 27% as a bear, mainly because of my climactic indicators. So let's go ahead and take a peek at that. The climactic indicators that I use are the VIX, and I also look at breadth through new highs, new lows, and then the advances minus declines in breadth and volume. And when I look at this last Friday, when Carl and I looked at this, the VIX had just come up to tap against that upper Bollinger Band. Again, reversed because I'm looking at it as sentiment, and the lower the reading, the higher, the more high complacency, the bullishness in the market. And so it's overbought when it goes to the top of the Bollinger Band, which is why I invert it. And you can see that last time we didn't quite get to puncture that upper Bollinger Band. Doesn't look like we were able to do that. Of course, Friday, we weren't able to do that. And now we're watching it starting to pull down just a little bit. But look at these climactic readings from Friday. We had new highs at, look at, if you go down, we haven't seen that amount of new highs in quite some time. We had some climactic readings back in February and late March that looked like this, and they're accompanied by very high readings to the upside on the advances minus declines, and you can also see advancing minus declining volume, also fairly climactic, not so much as the other two. But when I see climactic positive indicators and a top touch of the upper Bollinger Band on the VIX, that pretty much is, to me, I'm looking at it as a buying exhaustion. And so far today, we are seeing some downside. Based on this chart, I would expect probably another day or two to work out some of those overbought conditions. All right, we looked at Wall Street sentiment. Let's go ahead and look at the RIDEX ratio. All right, here we go. With RIDEX, Guggenheim manages a group of funds that a company called RIDEX used to manage. And what they do is they have a total, they have bear funds, they have money market funds, and they have bull and sector funds. And so this basically measures the amount of assets going into each of these. We get every night, late at night, RIDEX, Guggenheim posts how many assets are in each of the bear funds that we follow, money markets, and then the bull and sector funds. And we keep tabs on the assets because it tells us where the money's going. It's not just a survey where somebody says, hello, I feel this way. I feel bullish, and you mark the bull box. But then what do? You go to your account and then you sell some stock. You maybe get into a bearish fund or something to that effect, but you voted bullish. So this is really the best place to look at what's going on based on money flows. So what I look at is, of course, the previous week. And as you can see, bear funds were in a decline. As far as money markets, I marked it as flat, just slightly lower. And as far as the bull funds, I marked it flat as well, a little bit of a rise there at the end of the week, coming in well until Friday. And so what I look at, so we're looking at a decrease in assets for bear funds, about the same for money markets, maybe a little bit lower, and about the same, maybe a little bit higher for the bull and sector funds. So honestly, when I look at all of these together, I would consider this to be a very neutral setup right now. I mean, if you want to look at it as it could be considered bearish because we did get a lot of assets pulling out from that the bear funds, from the bear funds, we saw a lot of that come out, meaning people were feeling more bullish, so they pulled out of those bear funds. So I would go with neutral to bearish at this point. And let's look at gold. And I think I wanted this one, not that one. Here we go. All right, so this is obviously there's gold. I put GLD up here just to give us some perspective as well by looking at the ETF. And then here is the sentiment. And the way we measure sentiment is we take the Sprott Physical Gold Trust and keep an eye on the premiums and discounts that are published for the fund. And right now, at least when you look at the past, if you look at 2019, we are on the high side as far as discounts. Certainly we saw a bit more at the end of last year. But at this point, I would say that the discounts are elevated. Typically, that's a good thing for gold, but I have some heartburn right now with gold. First of all, I got a bear kiss on the PMO. We had finally gotten into positive territory. Now it's pulling back down. You can look at this and think, okay, well, maybe we've got a flag with a nice pennant on it. But when you look at what's going on with GLD, I see a descending triangle. You've got the equal lows on the bottom, the declining tops trend line. That tells you to look for a breakdown. So I am not bullish gold right now. I would have to say I am sitting on the bear side of things. I would be looking for a breakdown of this rising bottoms trend line here on gold itself, and GLD. I would expect that drop below 121. You can see in the thumbnail, that's exactly where that support lies. So not looking too good for gold. Like I said, I do want to note, though, that discounts are still on the higher side for the year, but I don't think it's enough. So, all right, let's go ahead and wrap this all up. And here we go. Let's just take it this way. There we are. Okay. All right, so I wanted to point out that, of course, as far as the 10-day moving average of the put-call ratio, we're looking bearish. AAII, very bearish on name, bearish for the market on Wall Street Sentiment Survey. I would have to say, given the tally here, that it's looking bearish for the market. Again, another reason I went negative this week. Decrease in the bear fund, so that's neutral to bearish for the market. I think the RIDEX chart was mostly neutral, though, really going in. Declining upper Bollinger Band test on the VIX, climactic. It looked a lot like a buying exhaustion, which is bearish for going into the week. Gold sentiment discounts are rising. We did get that PMO bear kiss, however. I don't like the descending triangle on GLD, despite what looked like an intermediate term flag for gold itself, for dollar gold. And that's all I have, Tom, for our sentiment report. I wrapped it up a little bit early here, but that should give us some time to talk about all those Monday setups and the poll and all of that. So.
Yeah, we've got, well, we had 6 stocks. What we've been doing on Mondays is providing everyone an opportunity to take a look at our setups, along with a couple of extra setups from those who are on or helping to produce the show, and see what the audience thinks of our picks, so they can either agree with them, disagree with them, vote them up, vote them down, whatever. So this is the poll for the current week. We're going to go over some stocks from last week in just a minute. But Sienna right now is leading at 36% with 90 votes cast. I would encourage everyone to vote, share your thoughts. DocuSign 20%, Etsy 19%, Floor & Decor 13%, Navient 8%, and Cognex 4%. So that is the way we stand so far.
Well, interesting. Cognex, of course, is the one I picked for my Monday setup. So I'm going to be very curious how I stack up against these others.
Yeah, I mean, this is going to be an interesting week, I think, for the market. I think if we can take out the highs from last week, and I think we're going to, I'm looking for another solid week this week. I think the S&P is going to challenge that 2940 all-time high this week.
Yeah, I'm not going to disagree with you. I think that, like I said, going into this week, it's been pretty, bearish looking. But that doesn't mean that by the end of the week, we couldn't get a little bit of a pop. But once we start testing those all-time highs, that's when I would start to be a little bit concerned.
Yeah, I would agree. Short term, I think, you got to get through there. If you're getting up to that area of resistance, then I think you're going to see more churning. I would expect more churning. I mean, if we go right through, obviously, I'd be very bullish.
Well, I think the SPY actually did make a new all-time high on Friday. If you wanted to take a peek at that.
Let's pull it up and see here. Maybe intraday. It doesn't look like it closed above, but it's certainly right there.
Mm-hmm.
Maybe it did close. I can't.
Yeah, I think it did. We were looking at it on Friday. I thought that was pretty interesting to see that coming through. And, I think that does give hope for coming up that we will eventually crack that overhead resistance.
Yeah, I don't think there's too much doubt this, at least in my opinion. But of course, we've never seen a bear market rally like this one. If this is a bear market rally, well, first of all, if we end up clearing across tops, then the bear market is over. I mean, that.
Oh, yeah.
Any definition of the bear market would be over if you're breaking out to an all-time high. So that's something certainly to keep in mind. But last week we did talk about a few stocks. So I thought I'd just pull up those and see. Now you had the best one with Run, at least week to week. Run
Yes.
was the better performer.
Yeah, the audience picked Baba from last week.
Okay. Well, we will actually, let me shorten this because I don't think too many people are going to be able to see that screen very well. But Sunrun, I think, does look interesting. It's got this overhead resistance that obviously is between 16 and a half. We have not been able to close above that level. So getting through that would certainly be an added benefit for anybody on the long side, something to watch. Baba was the audience.
Yeah, I'm still holding Sunrun. So that's an intermediate term hold for me right now.
Yeah, I think that looks good. I think the group looks good. Alibaba did get up and challenge the prior high. I would almost look at that maybe as a little bit of a cup, not exactly rounded, but if we go with closing prices, it'd probably be a little bit more rounded. But anyhow, that does look like maybe some sort of a continuation, whether you call it a flag, maybe some kind of a triangle, whatever. But today has been a bad day. And the audience actually had a pretty good pick until today.
Yeah.
Through Friday, it was actually breaking out. It looked like maybe we had something going. But I think for me anyway, I maybe would look at this trend line because it looks like the trend line and the 50-day moving average both come up together. So we'll want to watch that. If we get a breakdown below that, it'd be a little careful. But otherwise, I still think this one's got hope. And then
Domo you had.
Yeah, DOMO was the one I had picked. And Domo actually had a really strong day back on Thursday of last week. And I thought maybe that was going to be it. I got out because I had hit a certain percentage target. But then when I saw it closed where it was, I felt pretty bad on Thursday because I thought for sure it was going to make a run at least for maybe 42 and maybe even for that 44, 45 level. But this just shows how volatile the market can be. We're right back down to that 37.5 level. I may be getting back in, as I mentioned.
I was going to say, that looks really interesting. I'd be watching the MACD or the PMO, whichever one you like, PPO. Look for start turning.
Yep, and this is where all the buyers have come in on 4, 5, 6 different occasions, right around 37.5. So we'll see how it closes today. If it fails, then I think you go down to this tail, which is probably 34.5. I think that would be the next area of price support that I'd be watching.
Absolutely. Well, I can't believe it's already the end of another show. And we're having a lot of fun with this, though, guys. Do take those polls because I'm starting to track it. I'm curious how people are doing and how we do. And I think it's just interesting.
Yep, it is. And of course, trading, I enjoy trading. I like to trade. I do it personally in addition to, being here on the show. So we'll see, how things work out over the course of the next week. Do want to mention that the Dow has bounced back. We can see now the Dow is only down 38 points off its earlier low. And despite Goldman Sachs week, we are still seeing some strength in a number of areas. United Health, Disney, and Walmart all having pretty good days, up more than 1% today. All right, that is it for today. Want to thank everybody for being with us today. Please remember to complete the survey as you exit. It is located below your video player. We'd love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.